In a previous video, we learned that we can organize all of our transactions in accounting by collecting them together in similar groups called accounts. We also learned that these accounts can have names assigned to them that can often be unique to your company and the needs of your stakeholders. Since these account names are often unique, it's helpful to have a list of accounts that your company uses so that all of the employees know which accounts are available to use when they are recording their transactions. This listing of accounts is known as a chart of accounts. A chart of accounts is simply a list of all accounts used in a business that's organized in a very specific way. First of all, the accounts are all grouped by the category within the accounting equation that they belong in. Assets are first, then liabilities, then owner's equity. And since revenues and expenses are part of the owner's equity, these come last behind the other owner's equity accounts. Within each category of accounts, there are also specific orders that are unique to each category. For example, assets are always ordered by liquidity, from the most liquid assets to the least liquid. So what does liquid mean? The term liquid in accounting refers to how quickly an asset can be converted into cash and traded. The faster I can trade something, the more liquid that asset is. For a beginning accounting course, I don't expect you to be an expert on liquidity, but it is important to remember what it means and know some of the basics. Because liquidity refers to how quickly an asset can be converted to cash, cash is always the most liquid asset and always goes first in your chart of accounts. Accounts receivable is typically considered your second most liquid asset, followed by any assets that you plan to sell or use quickly, meaning less than a year. For our example, as a sole proprietorship, we will consider supplies a fairly liquid asset since most businesses use the supplies they purchase in less than a year. After supplies, we can list any assets that are less liquid, meaning that they are harder to trade or convert into cash. These would include our equipment and vehicles since businesses typically keep these for many years, and it is harder to sell these when you're done. So there is the order for assets, listed from most to least liquid: cash, accounts receivable, supplies, equipment, vehicles. For the liabilities category, short-term debts, or ones that we will have paid off in less than a year, go first. Other than that, everything is just alphabetical. So accounts payable and credit cards are both short-term since most businesses typically pay these off regularly. Since accounts payable starts with an A, it goes first, followed by credit cards. Then any long-term loans can follow. Owner's equity for a sole proprietorship typically only has two accounts: capital and draws. Capital always goes first and draws follows. Revenue and expense accounts are always alphabetical. While most small businesses use names to describe their accounts, some larger companies use numbers too. These make it easier to communicate specific accounts with other accountants and staff. While there are no rules on how numbering works, most accountants follow this pattern. All assets typically start with a 1. All liabilities start with a 2. Owner's equities are 3s. Sales are 4s. And since the expense category is typically the largest, they get all of the other numbers from 5 to 9. The order of the accounts is more important than the numbers. So when accountants create numbers for accounts, they typically make them very large, like in the thousands, and leave big spaces between the numbers so that there is room to add new accounts in between as the company grows. So for example, our assets section would possibly look something like this: cash as 1,100, accounts receivable is 1,200, supplies is 1,300, and equipment is 1,400. Each account begins with a 1 and has large spaces so that we can add new accounts in between depending on where they fit in the liquidity order. Account numbers are very common, and your instructor or manager may want you to use them, so check with them to find out more about account numbers. For this course, however, we will focus more on account names. That is a lot of information, so let's review quickly. A chart of accounts is a list of all accounts a business uses. This list always goes in a specific order according to the accounting equation. The numbers for accounts typically follow this order too, with assets beginning with a 1 and working down the categories from there. Each category has a specific way of ordering their accounts. Assets are by liquidity, liabilities put short-term first and are alphabetical, capital is on top of owner's equity followed by draws, and revenue and expenses are alphabetical. To learn more about accounts and other accounting topics, check out more of my videos on YouTube or visit ToriNorman.com.